What this really means is simple. The smart money already loading up while the rookies still hesitating. Gold heating up. Nvidia building $1 trillion runway. Camtech getting scooped by institutions. That's not luck. That's strategy. December always been a power move month because funds position early for the new year. Bottom line, the hunters buying assets, the prey buying excuses. Play the long game and stop thinking short term. Let's check out this clip.
Every cycle has a moment where fear is loud. We're talking about the fear and greed index even being at 6. The headlines are wild and everybody swears the world is ending. But there's also the moment where wealth is really solidly being transferred from the emotional to the strategic. And right now, heading into 2026, here's 3 stocks I'm lining up perfectly. Low risk, high upside, backed in by real data, real demand, and real money flow. And I'm buying these heavy going into December, right? There's not hoopla, there's not guessing. This is me being in the charts, me finding really good fundamental analysis, me looking at really great stocks that I think can perform really well going into this year. Now, 2 of them you may know of, I know you know of, but the third one that I'm gonna talk about at the end of the video, it's a sleeper. It's a small cap stock, but it's quiet. It's making really big moves in the game, and I really think you should pay attention to it. So before we get into this video, man, I want you to like, I want you to subscribe, and I want you to share this video. But also in the chat, tell me what you think, and also tell me what your sleeper is as we go into this new year. Let's go, man, try it with me. Every few years, y'all, the market gives us this window, a moment where everything looks chaotic, it's uncertain, emotional investors start running for the exit, right? I think we're in that moment right now. That's when disciplined investors really build generational wealth. And I truly think that as we end 2025 and go into 2026, it is shaping up to be a really great moment because what do we hear? We hear about the Fed cutting rates. We hear about Trump signing these bills for AI strategically is important. We hear a new Fed coming in, and the data is just screaming it. Gold is set to explode. Nvidia is setting up for the next $1 trillion. And I do have a sleeper that is truly just stacking revenue and institutional money. You know, they slowly but surely getting into it. Now, I'm gonna show you exactly why I like these 3 stocks with data. But remember, this is not financial advice. This is just me telling you what I'm gonna do, and then you have to do the research too. Of course, I'm gonna give you the research, but I want you to make your own investment decisions. Now, number 1 on the list is gold. Now, why is this the most asymmetric trade going into 2026? Now, before we get any further, let me just say this. The word asymmetric may be big, but it's just a trade setup where potential upside is not being looked at and it outweighs the risk. And the potential winning is higher than what the market really realizes. So when people call a trade asymmetric, they simply mean that the market is mispricing the risk. The reward on the upside is usually high. The downside is limited or protected. And fundamentals and the overall data actually supports what this move is. The narrative really hasn't caught up with the opportunity yet. And so this is why people like Paul Tudor Jones, this is people why Stanley Druckenmiller, Bill Ackman, and George Soros, some of the greatest investors of all time, have built their career on doing what? Finding asymmetric bets that people weren't looking into. So I just wanted to clarify that for y'all, because I know a lot of times you'll hear these words, you don't know what the hell they mean. And for me, it's not only about giving us information, but it's also about helping us really just understand some of the things that's being said. So when you hear the word asymmetric, just know that means there's an asset, or when you hear the word asymmetric trade or asymmetric investment, it's really just saying that the asset has a high potential with a low risk, or the market information hasn't caught up with the reward that's there. So I don't want you to be confused by that. So I want to start off with gold. I know what you're thinking. Trap. Gold, like, bruh, that's old school. That's not exciting. That's not crypto, right? But I want you to hear me when I say this. The small money in this world is piling into gold right now, and the data is telling us why, right? So we see companies like Goldman Sachs, They see gold hitting like 49 by 2026. We see banks like Deutsche Bank, which is a huge bank, raise their price target to 4,500. We see insiders, we see China, we see business insiders saying that gold can go up by 20% by 2026. And think about it, gold has already outperformed the Nasdaq. I mean the S&P and the Nasdaq. Right, gold's up 59% and they're barely cracking 20. And we see gold picking up toward the end of the year again. Why? Well, rate cuts are coming. Yep, that's right. When rate cuts fall, gold becomes more attractive. Dead simple. Lower years equal higher gold. The US dollar is weakening. That's what the rate cuts do. So gold is priced in dollars. Weaker dollar, gold becomes cheaper to buy, right? Foreign asset buyers buy more gold. Central banks are loading up aggressively. Why? Because the world has a lot of debt right now, and gold is the thing that they can count on. Like, and it's not me cutting out crypto. This is not saying nothing about any other asset, but gold has stood the test of time, right? And it is one of those things that the people just believe in, right? And so you see countries like China, you see America, you see all these countries like loading up on gold. They're buying gold at the fastest pace in decades. That's not emotion, y'all. That's countries hedging against debt, inflation, and geopolitical risk. I'm just being real with you. Private investor, that demand is rising as well. Even small shifts in private investments have moved gold fast because the markets, well, there's a demand for it. And you want to know something that's even crazier than that, y'all? Gold doesn't need hype. It doesn't need earnings. It doesn't need forward guidance. It doesn't need investor sentiment. It doesn't need consumer confidence. It just runs on macro tailwinds. And every macro tailwind in 2026 is pointing straight upward. Now, let me go a little further. A tailwind, I got to explain that to you because I don't ever want you to be lost. A tailwind is an external factor or something that you can see that boosts an investment, helping it perform well. So an example of a tailwind in the economy would be like lower interest rates. What does that do? That boosts stocks, it boosts tech, it boosts housing. Government spending, that's a tailwind. What does it do? It boosts sectors that are tied to infrastructure, right? A weaker dollar boosts gold and earnings, right? Population growth, that boosts demand for housing. Energy demand increasing. What does that do? That boosts oil, uranium, and renewables, right? These are what's called tailwind. So a tailwind essentially is a bigger picture force, right, working in our favor. It pushes the market up, it pushes a sector up, or a stock up. When you invest and you got like tailwinds behind it, the probability and the success rate of that investment goes up, right? So that's what we mean when we see tailwinds. So here's an example of how we can explain it just a little bit further so you can get it, right? So interest rates cuts become a tailwind. Why? Because lower interest rate equals cheaper borrowing, more investment, higher valuations. This is a major tailwind for who? Tech, AI, semiconductors, real estate, and gold, right? Tailwind, right? Weaker US dollar. Like, how's that a tailwind, Trap? Well, a weaker US dollar does what? It boosts gold, it boosts commodities, it boosts emerging markets because foreign companies then get to take that, invest into America. And then what else? Earnings, right? So cheaper money, companies get to invest, macro tailwind, right? Government spending, it's a fiscal stimulus. That's a tailwind. Why? Because when the government launches major initiatives like the Genesis project that Trump is doing, the CHIPS Act, infrastructure spending, it creates demand. Demand for what? GPUs, data center, energies, manufacturing, robots, raw materials. These are what we call tailwinds. And these tailwinds now are working in our favor with a lower dollar. This is why I like gold. So yes, I'm buying gold heavy in December because the upside is massive, the downside is low, and the risk reward is better than almost any asset out there. Again, gold is up 59%, 60% going into the year. So give me some gold. Now, as we go on a little further, we got to talk about the giant, the elephant in the room. Now, I get it. I know it's known. I know you're going to be like, Trap, we know about that, but I got to say it anyway. NVIDIA. I'm 100% buying NVIDIA in December. I'm buying it right now. Why? Because the stock has fallen between 10 and 15% from its high. People are screaming the AI bubble. They're really just being emotional right now.
Whoop-de-doo.
And They're reactive. They're reactive to the headlines. But look at the real data. NVIDIA did $187 billion in revenue in 12 months. Management is expecting it to do another $500 billion going into 2026. The Blackwell chips sold out. Analysts say that alone could push NVIDIA past the $5 trillion to $6 trillion. And we know it touched that already. And then you got billionaires like Ken Fisher. They loading up and adding NVIDIA. They not trimming. Now, let's go back. We saw people like SoftBank sell their whole position in gold. Well, we talked about that with the Japanese yen. Well, what happened, Trap? Well, we saw the Japanese yen go up. We saw Japan was in a crisis, right? Because they was raising those interest rates. And a company like SoftBank being in where? Japan. It needs bread. So what did it do? You got all this NVIDIA play. Now, it's saying that I still won't get into the AI race. Well, right now it does look like, well, Trap, they kind of made the right move. Well, you got to look at things in time frames, look at things in the long run. So I feel like they are truly missing out on a moment. And family, here's what people misunderstand. NVIDIA is just not a chip company, y'all. It's really AI infrastructure. It's the edge behind AI service, data center, supercomputer, autonomous driving, robotics, and every AI scaling sector there is. So when a revolution grows, NVIDIA grows automatically. And we're looking at the market run up without NVIDIA. Imagine what they do. We talking monster revenue here, y'all. Like, I don't even want people to get this misconstrued, right? Let's just talk about the Q3 earnings for a second. What NVIDIA reported, right? NVIDIA reported $57 billion in revenue. That's up 62% year over year. That's 22% quarter over quarter. Let me just say that again. $57 billion in revenue. They needed NVIDIA to put up a triple-double. Bruh, they put up a quadruple, right? They put up points. They put up double-digit points. They put up double-digit rebound. They put up double-digit assists, and then some kind of way they put up double-digit blocks. You hear me? They went crazy, right? We're talking $57 billion in revenue in one quarter. I just want you to understand like how hard that is to do. $57 billion in revenue in one quarter. That's 90 days. That's insane. That's up 62% year over year. I mean, last year, this time to this year, that's up 62%. From last quarter to this quarter, which is quarter over quarter, that's 22%. That's like nobody is doing those kind of numbers at all. Data center revenue up 51 billion. What is that? 66% year over year. I mean, last year to this year, 66%. Quarter over quarter, 25%. Last quarter to this quarter, like they dominated the earnings. Net income, operating income, both soar, reflecting what? Strong demand, y'all. Margin power, efficient scale, pricing power. And yep, we saw my dog Google drop, and guess what NVIDIA said? Yep, we're a generation ahead of them. NVIDIA truly described this quarter as a record across all levels. Data center, GPUs, profit margins. CEO Jensen Huang said Blackwell sales were off the charts, and cloud GPUs are sold out, y'all. What are we talking about? Forward guidance? Guess what NVIDIA said? Yep, well, we see Q4 coming in at $65 billion in revenue, up 2% ahead of what estimates from the analysts. Like they just said, like, we gonna just keep making money. And so while you have people like Marco Burry out there saying they cooking the books, and then you have people who have no idea what accounting is saying, yeah, they cooking the books, they cooking the books. Run that check up, man. And I want people to realize, there's always people that's always hate. There's people that hated on Michael Jordan. There's people that hated on LeBron. There's people that still do it, even when they're looking at greatness in the face. They just hate us. Right? People could say Tom Brady is not the greatest quarterback of all time. Bro, the rings and the stats show it. Yes, you can say the first couple of years he was a system quarterback. That's right. You had Romeo Crennel. You had Charlie Weiss. It really depended on the defense. And then he molded himself into a great quarterback by what? Being in the gym better than everybody else, seeing all the defense. At some point, he went from being a quarterback that managed games to like, yo, what would Brady do? This is what's happening right here. People are watching greatness right now, and they're saying, yo, like, nope, that ain't greatness. They cooking the books. But man, it's like he's selling crack in the 80s. All right, man, my bad. Whoop they do. Don't say that, Trap. Anyway, let's go a little further. Gross margin, guidance, strong. Reflecting what? Continued strength in their AI infrastructure business. And then on the call, because people always worry about what they say on the call. On the call, management emphasized that AI compute demand is compounding, both training and the workloads, explosions driven by the Blackwell. The CFO stated that the Blackwell and other AI infrastructure contracts represent a backlog potentially worth hundreds of billions through 2026, given long-term visibility. I'm just saying, we watching greatness happen. Everybody just want to fuss about it. And Blackwell, well, why does that matter? Well, everybody was looking at what Blackwell gonna do, and then Blackwell and NVIDIA's latest generation of AI, data center GPUs, and compute. This quarter, Blackwell said, well, we sold out. Plain and simple, we sold out of the Blackwell. And because of that, NVIDIA's backlog is getting longer. AI, Blackwell are critical in granting NVIDIA in-chain leverage and pricing power. They're just a step ahead of everybody else. This is not hype. This is real results. This is record revenue. This is record data center demand. This is excellent margins. With Q4 guidance up to $65 billion, the company is projecting continued acceleration, not just in one quarter, but for the year. AI infrastructure boom. It's the core engine of NVIDIA, making it high conviction, long-term play. Yep, the stock is up 29% this year. Still beating the S&P, still beating the QQQ. And I mean, for some reason, it's down 15% from the high. And that's okay. Because I look at it as an explosion waiting to happen, especially with Trump signing this AI bill, making AI a priority. Again, one of my favorite stocks right now is AVGO for sure. I love seeing that. And the reason why I love seeing companies like that move is because it gives other people a chance to move the market and not let NVIDIA tank the market. So now we not just saying, yep, NVIDIA gonna hold the market up. I'm glad we not in that space no more. I didn't like that when Apple was like that. I don't like it when NVIDIA is like that. I like seeing companies like run, but here's what we cannot do. You cannot sleep on a big dog. And right now, getting NVIDIA right now for December is something I have to do. Especially when you got analysts having a price target of NVIDIA at 256, 225, 240. Now, let me get into my third pick, man. This is my sleeper stock. It's a small cap stock. Listen, let me put you on to something. Main Street not talking about this company yet, but I promise you it's a killer. Ticker symbol CAMT. I put my Patreon on this months ago, and it's just performed well. This one right here, this is the kind of stock that sneaks up on you before you look at it. You 3X, 4X, 5X when the institutions don't woke up. You got companies like Jeffries. They just bought 4,000 shares of this. Right, that's $338,000. Institutions now own 41% of the company. 9 analysts rated as a buy. The stock just posted record revenues of $126 million in Q3. They expect $127 million in Q4. They beat earnings, they beat margins, they beat guidance, operating expense. They got low debt. This is one of them ones. Now, what do they do, Trap? Well, they build inspection systems for the semiconductors. That's right. The stuff that AI chips need to function, well, got to go through them. In other words, let me make it a little clear for you. NVIDIA grows. Semiconductor, the complexity of that industry grows. And guess what happened? Camtech's demand grows automatically. They're small cap, they're profitable, explosive revenue trajectory. Institutional flow is in. Guess this, it's trading at $100 and something. It has a price target of 150. This isn't a GPU company, y'all. This isn't a cloud company, y'all. But every single one of those companies depend on Camtech to ship working chips. That's right, they depend on them. They build the machines that check the chips for defects before chips can even go into AI servers, smartphones, EVs, robotics, data centers, and everything else. If a company is building a high-powered chip with high precision that's expected to do a lot, it's a great chance, 8 out of 10, that Camtech's equipment is the one that they have to go to for the last step before it get packaged and shipped. In the AI era, that stepped into every mission critical component. AI chips are bigger, AI chips are hotter, AI chips require extensive precision, AI chips cost tens of thousands of dollars. And one tiny defect can destroy a whole batch. So the companies building those chips needs tools like Camtech more than ever. Why? It's like your engine being inspected before it leaves the spot. Well, let's go a little deeper. So the company doesn't publicly say who their customers are. Keep it clear. But think about this. Any leading IDM uses Camtech, so that's Intel. Any leading foundry business, which is TSMC and Samsung. Any leading OSAT, companies that package chips before they shipping. Any leading advanced packaging company. Any top tier AI design uses Camtech. So whoever makes the world's most advanced chips, they gotta go to Camtech. So let's go a little deeper. And that includes the same companies like NVIDIA with their H100s, H200s, B100s, B200s. That's AMD with their MI300s. That's Apple with their M series. That's Qualcomm with the Snapdragons. That's Mobileye autonomous driving chips. That's high bandwidth memory, HBM. That's 3D package chips used by AI data centers. All of them have to go to Camtech. Anywhere advanced chips is packaged and used, Camtech is involved. So, I just want to dig this one a little deep because this one you need to, I like to give you data. So AI chips aren't built like normal chips. They require 3D stacking, thousands of interconnections, thousands of silicon, HBM memory chips, advanced packaging. They need a whole slew of things. And this is where Camtech shines because they have to check all of that for defects. And the number one reason why AI chips need more inspections than ever is because like an NVIDIA H100 or B200 has more layers connected that need to be inspected than ever before. This isn't optional. This is mandatory. In order to say you the best, you got to go through drills. You got to get tested. Well, Camtech is the one to say, nope, that ain't right. You got to fix that before it leaves. And it's happening on more and more layers, and it's more and more steps, which means more machines, which means more demand, which means more revenue. We're talking about a company that's going to print money. We're talking about a company that just won't fail. Now, Camtech is positioned at the most explosive part of the chip making chain, advanced packaging. Now, I don't want to talk over nobody's head. I want to make sure you get it. So just think about it before a chip can even just think about it like this. A company goes through everything to make a chip. A company goes through everything to put a chip on the line. A company goes through everything. And before that chip goes out, it has to be what? Check it for defects. Because the last thing you want to do is put a defective batch of chip inside of a data center and the whole data center don't work no more. And so what does Camtech do? They say, yo, bring it over here to us. Let us inspect it. Let us make sure this is right so we can protect you. This is the fastest growing part of the semiconductors because chip makers are no longer just making chips. They're stacking them, stitching them together, and connecting massive memory blocks together. Camtech is the one of those few companies, this will give them a strong moat, that validate the high-end process, meaning they the ones, after you do all that stack, so when you hear stuff like they have the full stack or this company has the full stack, guess what they got to do? We got to send it to Camtech. It's a monopoly in a niche. They compete at the high end, but it's one of the only companies with proven advanced packaging tools. It has high recurring revenue from services and upgrades. It's a must-have, not a nice-to-have, not a I can consider to have. It's a must-have. All chips require inspection, and inspection demand is rising. This is what Warren Buffett will call a toll booth, meaning you got to go through me to even get into the market. The industry must pass through Camtech before it even moves forward. Now, AI demand is compounding, so demand is growing. Every time NVIDIA or AMD raises their GPU production forecast, every time TSMC announces more capability, Every time hyperscalers, Meta, Google, Amazon, Microsoft talk about bigger clusters, Camtech demand automatically rises because those increases translate directly into more wafers, more packaging, more chiplets, more inspection points, more machines needed, more Camtech. Now, the thing about Camtech is they'll never be a part of the hype. You actually don't need it. It just needs AI production. It needs the production to keep exploding. And what do we know is happening? It is exploding. So while they won't get the name, they won't get the hype, they will definitely be the name that's not talked about, but the name that is reaping the benefits. And let's go from a financial stake. Strong revenue growth, high margins, no debt issues, consistent profitability, recurring orders, backlog visibility that's exploding, an explosion from AI platforms. It's a small cap stock, but not in capability. Its customers are the multi-billion-dollar giants. This is the type of play that you make early and you hold it for the wave. And you just hold it. And so those are my 3 buys for December. Before you go, I want you to just think about this right quick. Why these 3 drives of all the companies? Well, because they balance my portfolio, right? So gold gives me safety, the upside during the rate cuts. It gives me stability. NVIDIA gives me growth and dominance in a mega trend that is unstoppable. And Camtech gives me the asymmetric small cap upside with institutional backing, the demand backing. This is not gambling, y'all. This is strategy. This is not hope. The minute you hope something happens is the minute that you lose. And so while the fear is out loud, retail is selling, hedge funds are buying. December historically brings massive inflows into equities. Rate cuts are approaching, the dollar is weakening, and 2026 is shaping up to be a huge year of opportunity. This is one of the ones that I truly want to have these 3 on my side. Family, listen to me. You deserve to play this game the right way, with clarity, with data, and with conviction. And I just want to help you see the game different. I want to help you turn your last name into an asset. So if you got something out of this video, man, make sure you like, make sure you subscribe, and share this video, man. We just want to provide you with real-time data that you can use in real time so that when you go do your research, we did all the hard work for you, and all you got to do now is put the pieces together. It's your boy, the Wall Street Trapper. If you made it to the end of this video, man, make sure you like and subscribe. But check out the links below for my Patreon and my Trappers Anonymous group. And I love y'all. I appreciate y'all. I'm out. Salute.